Hello traders, this is the weekend edition, good through Sunday, October 21st, 2012. My name's Dez here at Grok Trade. And the Dow off by 205 points, down 1.52%. The S&P down 1.66%. NASDAQ off by 2.2%. Russell's off by 1.9%. Banks down by 0.63%. The VIX spiking almost 13%, knocking at 17. We've been warning about this spike in the VIX, and we are seeing it right now. Gold off by 1%, silver off by 2%, over 2% sell off on crude oil. US dollar up 0.37% for all you Grok graduates. The trend at 2.53. And before I get into any of the technicals, I want to share with you here, go to the website, click on mentoring, and that will give you a lot of videos of a lot of our students. Watch them. All right, let's take a look here. We have lower swing high, lower swing high, lower swing low. We hit our head at resistance and drop. Now here's the big picture. If you remember, see these two blue lines? We stayed between these two blue lines. It was a nice trend going northbound. Then we go into a double top. Now we got this triple top, and now we're dropping. The question is this a bull flag? It may be, but here is a big time issue that I have. If you look at this orange trend line, support, support, there's my two spots. Let's follow this higher. Support, there's our three spots. We close lower than that support line. That is a major issue. However, we did find support at the 50-day moving average. That's that red line coming up here. So we're still within this channel, these two red lines. We're still there, but what an ugly drop that we saw in the markets on Friday. Now the Dow daily is a different story. We closed below the 50-day moving average, but not by much. But we closed below a big support line right here. This is just a big support line. We closed below it, ouch, and we did it on massive volume. Big volume, especially for a Friday gang. That is impressive volume. All right, here we're taking a look at the NASDAQ. Thought, hey, is this a big bull flag? And I'm telling you, the NASDAQ is saying, no way. We didn't even hit the upper trend line here. We stopped at the falling 20-day moving average. 2 days ago, Thursday rather, we closed below the 50-day moving average, and then we just had a sizable sell-off, busting down through this bull flag support line and this major trend line coming higher here. You can see this line coming up, crack, busted that. It's now heading towards the 100-day moving average. Big time problem. Russell's had this falling wedge type formation. It promised of a nice breakout. It was above the 20-day moving average, like we were going to take off. However, on Thursday, we said we had a bearish Harami reversal pattern. And then, boom, big drop all the way down, finding support at this trend line coming across right here. And we're bouncing off of this trend line. So nice support, did a little bounce, there we are. But the markets are broken. They continue to be broken. Let's go to the weekly charts. Weekly charts trump the dailies. So we're dropping. This is just a nice bull pullback on the weekly, gang. And we have what's called an inverted hammer. Inverted hammer down here. It's not a shooting star. Those are at the highs, the lows. Inverted hammer. Go to our chart school at freeonlinetradingeducation.com, and that will help you out. So that's looking pretty bullish. But the problem is we have a bearish divergence on the MACD. If I go over here to the NASDAQ, big bearish divergence on the MACD. And we're dropping, another nice pullback, but the problem is it's in the confines of a rising wedge. That is no good. A slight close below the 20-week moving average. So the S&P 500, we had this high base that we were building. We saw last week we came crashing down, just smashed our foot down here at a support level. We started off the week pretty promising. We gave it all back. Now we're down there resting on that support again. The question is, will we hold that support? That is a crucial area we must hold. Remember this video. Big. Same thing here, but we're not quite at that support line. I would say if we were to get below, say, 13,200 230. That would be extremely problematic for the market. So while we're here at the Dow, let's go to the monthly. The monthly is so pinched, you could not get more pinched than this. Everything is hedged on the monthly. This is the big dog. The tweezer top, we were over it, threatening to break out to the upside, but look at this. So far this month, we've come right back down, and we're within the confines of those two lines. We're at the apex. We are due for a drop. This is a bearish formation. If you go to the S&P 500, same thing. Tweezer top, we're not closed yet. The month's not over, but we're right there between these two blue lines. We could not be pinched any more than what we're seeing here on the S&P. Now, if you haven't done so yet, share this video with your buddies. They need to have this level of trading technicals to help them in their trading. What we saw in the NASDAQ so far in the monthly is it's already breaking down, trying to break a major trend line. Now this major trend line goes back to 1999. We come over, we find resistance here, so blow this back up. We pop through it, but now we're closing back below it. It's my cell phone. I got a text that just came in, and so that's an issue. Russell's here, look at this, we've already broken that line. See this line? It's already below it. So the NASDAQ and Russell's showing us significant troubles and problems right now. This is the bank weekly chart, rising wedge. We're coming down to support on this, and on the daily we're down below the 20, down below the 50. We found support here coming up on this trend line right there. We need to find support, and fast, for the markets. And let's take a look here at VIX, and we're going to go to a weekly chart on the VIX. You can see this low, high, low, high, low, and we're heading higher at this moment. And I would say that I usually don't like to put trend lines on the VIX, but look at this: resistance, resistance, resistance. Are we going to bust through? We certainly could. Now here's gold. Gold on the weekly, big rally, hit our head at these resistance points. See this? Hit our head, dojied out, and now we're pulling back. And I'll tell you, so on this week we're increasing on volume on this drop. On the daily, we are finding support at the 100-day moving average. Now for you silver traders out there, on the daily we had this little base and we dropped lower. And on the weekly, it's just a nice little pullback taking place. It makes you wonder if we'll find support about $30 on SLV. And let's also take a look at Apple. This is the weekly chart. This is a rising wedge. Rising wedges are very bearish, and we said that when we hit our head and started dropping that we were in a lot of trouble. And we've since been dropping every week since. Now we're below the 20-week moving average. So I said death below the 20 SMA, and that's what we're dealing with here. So big bearish divergence, and volume increasing on the sell-off at these levels. That's the weekly chart. Here's the daily, just hammered on with volume, just massive. We even had a rising wedge here that started breaking down that foreshadowed what we were seeing on the weekly. Yeah, so Google, man, what a train wreck that's been. Here's yesterday's daily, today's daily. We're at 681 and some change with huge volume on the sell-off on the weekly. Just a massive pullback. Facebook, if anybody even cares, on the weekly, we're back at 19. But here's the thing. This setup is very bullish. Resistance, resistance, resistance is what to break out, get a double bottom. I think we could have a buying opportunity come up here on Facebook, and it just needs to get back above these moving averages, and that would be helpful. This is FinViz. For the week, conglomerates did the best, 2.4. Technology did the worst at minus 1.3. Financials, not too bad. However, financials gave quite a bit back, to end out the week. For the month, technology is just in the hole, just doing horribly. but utilities doing well and healthcare doing well. Those are two defensive sectors that are holding their own right now. So be watching financials. If the banks start to drop, this market will take a nosedive. Share this video with a friend. I threw a lot at you, a lot of information, but listen, do this one thing for me. Just go to the website, click on this mentor tab. There's a lot of free information here. Go to the chart school, go to watch our videos, do the one-on-one courses. A lot of you need to go through that. And by the way, a lot of you guys, you need to do the one-on-one courses. Those are free. Go through those. But you have to do that before you do the 201s, because the 201s will be too advanced for you. This is a stiff amount of information. It's a home study you can take, but definitely do the 201 or the 101s first, then the 201s, and you should only do mentoring after the 201s. I'm telling you, you only want to do mentoring after the 201s. Unless you've been trading for 2, 3, 4, 5 years. If you've been trading for a number of years, then you can jump right into mentoring. But don't take my word for it. Click right here. Once you do that, this is what you're going to see. It's going to pop up. You have a little form right here. Fill that out. But watch these videos here, and you will thoroughly enjoy all of those videos. I have a few words for you. Stay tuned and listen to what I have. We all have hobbies. And usually a good measurement of how important a hobby is to us is by how much time we spend tinkering with that hobby, doing that hobby. And probably even a better measurement of how serious or passionate we are about a hobby is how much money we invest into that particular hobby. Let's talk about trading. Trading, most people, at least listening to this video, considers their trading more important than their hobby, because the hope is an ROI, a return on investment. The question is, does the time that you spend educating yourself in trading and the money that you invest in the proper education match up to what you feel is important, or at least the most important level you deem trading to be in your life? Now, it is crucial that we understand, for us to reach our full potential as a trader, what we have to do is position ourselves through the gateway of formalized trading education. It's much like learning anything of any substance. You need the proper education to get there. Trading is certainly that. If you're going to save your money or take shortcuts, you certainly do not want to do it in the area of education when it comes to trading. Hey, if you're going to learn to play golf, maybe you don't have to hire a professional coach. Go and try to play golf on your own, read books to play golf, go to the seminars, to learn to play golf. But perhaps trading is much like flying a plane. What you want to do is make sure that when you're flying that plane, that you have the proper education under your belt. You want to make sure that you've gone through ground school. You want to make sure that you had a professional pilot as your instructor helping you learn the ropes of being a professional pilot yourself. So all I'm saying is this: take your trading education seriously. Consider Grok Trade as your area and your resource for formalized trading education. We're here for you.
This may not be you, but traders who come to Grok Trade for help are sharp, well-educated, and have made money in the past. However, they weren't executing consistently nor disciplined in managing risk. They bought high and sold low. They let small losses turn into large losses. They kept losing money. This does not have to be you. They made a change before it was too late. Grok Trade students trade within the live markets with confidence. Get signed up today before it's too late for your trading.